Hi, welcome back. This is Ira, and in the last video, I took you through a set of pointers that would be able to help investors when making investment decisions. Every investor has their own unique return expectations, risk tolerance levels, and domains of interest. An investment thesis is essentially a summary of an investor's investment preferences and comes about as a result of research, reflection, and analysis. Thus, an investment thesis serves as a guide to choose investments that match one's investment objectives. Both venture capital firms and angel investors have their own respective game plans or investment theses. VC funds use their investment theses to attract limited partners who invest in the fund. A compelling investment thesis helps LPs decide whether a fund meets their desired allocation criteria. The investment thesis of a VC fund would go something like this. Yellow Fund is a $100 million seed fund in Hong Kong to fund cryptocurrency and blockchain startups in Asia that leverage the partners' prior UI, UX, and HFT trading experience in roles across Asia. Angel investors may or may not have a formally documented investment thesis, but nonetheless, they do have a general rule of thumb or criteria that guides their investment decisions. There are multiple components to a sharp investment thesis. Let's look at some investment preference criteria that shape an investor's investment thesis. Hand-holding versus non-interfering. Does the investor want to handhold the company, or do they want to invest and then not interfere in the business? Moneyball versus Powerball. Does the investor believe in diversification to minimize risks and thus go in for risky investments riding on the logic that 1 in 10 would work out? Or do they pick and choose every investment meticulously such that each investment is poised for profit? Sector specific versus sector agnostic. Is the investor sector specific or sector agnostic? Stage of investment. What stage does the investor prefer investing in? Short-term versus long-term horizon. Is the investor looking to stay on for a long time, hoping to make profits, or are they looking to exit in the next round with a small profit? What duration does the investor look at keeping the investment? Are they a short-term or long-term investor? Lead versus follow. Does the investor take the lead in investment rounds, or do they prefer to follow a trusted lead investor in most rounds? Profit motive versus entrepreneurial development motive. Does the investor invest with the motive of just profit, or do they invest to boost entrepreneurship and to give back to community? Geography specific versus geography agnostic. Does the investor invest in only a specific geography, or are they geography agnostic? Founder competence versus idea competence. What do they prioritize more? Founder competence or idea competence? Strategic approach versus a return approach. Do they invest using a strategic approach that will benefit their parent company, or do they invest solely based on a return approach? All these questions need to be answered to form an accurate investment thesis that will serve as your Bible for investment decisions.